So I'm going to talk a little bit about a new product that we've had actually for a couple of years. It's a reverse second mortgage. And so it's a reverse product, but it's actually a second lien. So it's like it takes the place of a home equity line of credit or a home equity loan. So a reverse second is a second lien on the property that a customer is able to take the equity and use that money for whatever they desire. The main point is there's no payment on that loan. So with a home equity line of credit or a home equity loan, you have a monthly payment every single month. So for older folks that have equity in their home who want to borrow that equity to use it for home improvements or investments or to pay off bills, they're able to access and use that equity and not have that monthly payment. I've recently have done one that these folks had a pretty considerable payoff on a recreational vehicle, and the payment was pretty hefty, and it put a bit of a strain on their monthly cash flow. And so we did a reverse second mortgage and was able to pay that off, alleviating that monthly debt. And so they're able to use, again, free up that cash flow for other things. Now, with a reverse second mortgage, you are still responsible for paying your first mortgage, as well as your taxes and your insurance, and you must continue to live in that property. So again, this is a second lien on the property. No payments are required. However, if you'd like to make some payments or interest-only payments, you may do that. Like any loan, it will accrue interest. The loan will be paid off ultimately when the house is sold or you move out of the house and of course the home is sold. So that is how the loan initially typically is going to be paid off.